Now, just take note that this presentation is purely for educational purposes. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. All right, so let's move along. Now, I'm going to start 2017 with this quote. Okay, this 2017 edition of this webinar with this quote. So insanity is doing the same thing over and over again and expecting different results. Any of you seen this before? Well, this is a very interesting quote to me, especially when it comes to trading. Actually, it applies to every single thing. You know, sometimes when you keep trying to do something over and over again, and you wonder why you keep failing, it's probably because you're trying doing the same thing. And especially so for trading. Now, why did I say it's especially so for trading? Because I've been in the markets for about close to 8 years right now. And this is my story, okay? If you again, we shall say story of a life. This is just my story, okay? Let me share, and if you can relate to it, perfect. Then you can learn something. But I've been this is my almost about 8-9 year of trading the markets, and every year, right? Especially in the beginning, you know how everybody's big on New Year resolutions to get fitter and things like that. And same thing for trading, you know, especially in the first few months, you know, you will set up your trading goals. I want to be less emotional when I trade. I want to let my profits run and cut my losses early. I want to stick to my strategy. So all these are little like vision statements or goals that you want to achieve for the new year, which is really good, you know. And I mean, resolutions, it gives you some kind of direction of where you want to head to for the rest of the year, which I think is good. It's always good to have a goal. But this is one thing, you know, most people when they set resolutions, right, the problem is that it's not sustainable. And it's very evident, especially in the gym. For those of you who go to the gym often, you notice that in the gym, I do like going to the gym during January, February period because it's always very, very crowded. But what happens, you know, when it comes to March, April, mid-year, the numbers starts tapering down. It's just the way it is. Okay, it's just human nature. So same for trading, right? In terms of resolution, right? Now, why do you think resolutions are not sustainable? What do you guys think? For those of you who are new to webinars, so I didn't get through this admin stuff. For those of you who are new to webinar, there's a question box you can type into it, so that at any point in time you can ask any questions. Yeah. Now, so most of the people, why they don't fulfill their resolutions or why it's not sustainable, is because in the beginning when they set their goals, okay, they rely on willpower. Okay, so they tell themselves that I'm going to stick to it no matter what. Okay, that's willpower, which is fine. But as time progresses, okay, willpower is not sustainable, especially when it comes to days whereby you are tired, when it comes to days where nothing is going right for you, when it comes to days where you're down and you just don't feel like doing anything. All right, so that's a limitation of willpower. But there's one thing that you can rely on that can create sustainable change. And that thing is habits. Okay, some people call it habits, some people call it rituals, but I'm a big believer on developing good habits, especially when it comes to trading. Okay, especially when it comes to trading. Because these are the things that you can do subconsciously without thinking. Without thinking. And that's what you need when it comes to trading. Because a lot of times when you are trading, is yours, and especially when you're emotionally very attached to the markets, your subconscious mind can sometimes take over. And your subconscious mind is actually formed by your habits. And if you have bad habits, let's say if you do a lot of revenge trading, or if you double up when you make a loss, naturally, if this is your habit, your subconscious mind will do the same thing when you are very emotional. And that is very dangerous in trading. And in the past, I noticed that I always have decent results. All right, I can get good returns across 10 trades, but it just takes a few trading sessions and I just blow everything up. And it comes to a point whereby this is a perfect quote for me. Sandy is doing the same thing over and over again, expecting different results, because I realized that my subconscious mind is somehow limiting myself from being a good trader. Okay, so it's always putting me back. And it's just something that is hard to explain. because it's psychology, and that's why trading is so difficult. Trading is not just finding some kind of strategy and just applying it to the markets. When this EMA cross the EMA, you buy. When this EMA cross the EMA, you sell. No, it's not as easy as that. There's a lot of psychology involved. So for 2017, if you find yourself hitting a brick wall, I urge you to sit down, explore your trading habits, understand how you trade, okay, and literally make sure that you're psychologically correct or psychologically sound when you're trading. When I say sound, I'm not saying that you're insane, but I'm just saying that you need to make sure that your subconscious mind is developing the good habits. Okay, so you need to write this down. Now, how I make sure that my subconscious mind is managed well is that I do a lot of meditation. Okay, the good thing about meditation is that it gives you a bit, it makes your mind much clearer. You know, I always give the analogy is like when you are surfing the internet on the web browser, sometimes you need to clear your cookies, right? And the same thing for the mind, you need to clear the cookies in your head as well. So it definitely, meditation to me helps a lot in trading because it helped me cultivate good habits, you know, and make sure that my mind is in the right state of mind whenever I approach the markets. Okay, so what I'm trying to say is that I think 2017 is not about finding the holy grail strategy because there are a lot of people preaching strategies outside, but it's about finding yourself, understanding what kind of trader you are, understanding your habits, understanding your psychology. That is very, very important. Okay, I use meditation to do it. You can do other ways, but it's something you definitely want to explore. All right, so this is something that I want to share with you in the beginning of 2017. Moving on to the charts proper. Now, those that are new, I always talk about price action. Okay, I always show this because this is a bread and butter how I trade. I always want to see what the market is doing, whether it's consolidation, uptrend or downtrend, and then I'll approach the markets. Okay, this is very, very important. All right, so if you don't understand price actions, you might want to read up a bit or look at my past webinars where I go a bit more theory. But it's good to understand it so that you understand where I'm coming from when I go to the live markets. All right. So moving on, let me just start with the indices. S&P. Interestingly, isn't it? I mean, the S&P just keeps going up, 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 up. Again, it's not our job to guess when it's going to fall. We just follow the markets. We just follow the price. Okay, and price is telling me that's still bullish. Now, for those of you who are still struggling trying to find what kind of trader you are, okay, very important, you need to look at the right time frames. The reason why I have 3 charts here is because I'm sometimes I look at the daily, 4 hour, 1 hour and 15 minutes. Okay, these are 3 time frames I'm looking at. Okay, if I'm looking to do more short-term intraday trading, normally I look at the 5 minutes, the 1 hour and the 4 hours. If I'm looking to do a bit more intraday to swing trading, I'm looking more from the weekly, daily, 4 hour and 1 hour. Okay, but so it's something that you can use as a guide. But the main thing you need to know what kind of trader you are and which is your reference chart. Okay, when I say reference chart is that which is the main time frame that you're looking at to plan your trade. Okay, so for example, if you're an intraday trader, you can use the 5-minute chart to enter the trade, 5-minute or 15-minute chart to enter the trade. But you need to ask yourself, which is your reference chart? Is your trade plan based on a 1-hour chart or is it based on a 4-hour chart? And then from there, you can manage your expectations better. Okay, so if you look at the S&P, now let's go to the weekly chart. Just a quick one. Okay, you can see the weekly chart that it is in a bullish channel. All right, it's still bullish, making higher highs since Donald Trump won the elections, and it's still pushing higher and higher. I'm not surprised if we hit 2300. Okay, but just bear in mind this little channel that I've drawn here, based on the weekly chart. The 2300 is possible. Right now, you can see that the candles 1, 2, 3, 4, 5, 6, 6 candles a bit toppish around this resistance trend line. But to me, the trend line is still a guide. Trend line is just a guide. It's not a hard and fast. It's not a black and white kind of level. Okay, and this level around the previous high was around 2280 to 2300. Any of those levels, just be careful. It might be resistance. But right now, it's definitely still on the uptrend. Okay. So this is the weekly chart. If you look at daily chart, oh sorry, Yasin, yeah, Yasin is asking where do I find your old webinars? Oh, it's on the website. So if you go to ig.com.sg, go under seminars, you see webinars and all the recordings are there. I think my marketing site linking up to YouTube as well. Okay. So there's a weekly chart. If you go to daily chart, okay, you can see that this whole area here is resistance to me. Okay, if you notice that the MACD below, there's a bit of bearish divergence because you can see that there's a lower high. So if I draw a line, sorry, where's my line? Okay, you can see there's a lower high, but in terms of the price, there's actually a slight higher high. So it's a bit of a bearish divergence, there. Okay, some of my clients say that this is actually a higher high, but for me, this is not really a higher high. For me, it's just a bit of just hitting resistance. But you might want to pay attention to this level here because on the 4-hour chart, okay, you can see that if you zoom out a bit, now these are the key resistance levels. So you see the 4-hour chart, the first resistance around the 22770 level, next resistance around the 2265 level. So if you see the resistance here, it's a pretty strong resistance. Now, what I'm very keen to look up for is anywhere around the 2270 to 2275 area. Because this level will tell me whether this breakout is legitimate or not. Because if this level is not able to break, if the 2270 level is not able to break and it falls from here, then this area here is actually a false break. And we might fall back to the level of consolidation at around the 2250 level. Okay, so if you're looking to trade the S&P, now long-term wise, if you're talking about weekly chart, seems bullish, but if you're talking about more swing to intraday, I would say it seems a bit more consolidating. So for me, the 4-hour chart is my reference chart. 2270 is a key level. If it's unable to break, it might fall all the way back to 2265 and then around the 2255 level. So these are the 3 levels here. Okay, but I'm very keen to see what happens is the 2270 level first, see whether it's able to break clearly. Because the number of resistance here. The reason why I say that, let me just draw another circle here. So the reason why I'm saying that might be a false breakout is because normally when it breaks out, right, you want the momentum to continue to the upside. Okay, so if you see, if you see it moving up like that, you want the momentum to come back to the resistance and support and push up higher. But if you notice this move, right, if this is the breakout move, if I draw the circle here, okay, if you say that this is a breakout move, because this candle actually closed above all this previous resistance, right, which seems legitimate, but if you notice this move here, the red candles actually reverse the entire breakout, which makes me less convinced about this breakout. You get what I mean? So the whole breakout candle consisting of these 2 candles here was reversed by all these red candles here. So it makes me question a bit more. Right? So even if you're bullish, the only place that you could have entered a buy from is around the 2265 area. Okay, when we hit the support here. Because right now, even if you're bullish, it's too close to resistance. It is a resistance, anywhere between 2270 to 2275 area. It is resistance to me. Okay, so even if you're bullish, I need to let it clear this level first before I want to do anything. But I'm more keen to see what happens here. And if it falls back below, look for 2265, and if it breaks, look for it to consolidate back all the way to 2255 or so. Okay, this is S&P for you. If you look at Wall Street, okay, if you look at the Wall Street, which is also another US index, okay, let me start with the weekly chart. Okay, weekly is still bullish. Okay, if you look at the daily chart, it seems a bit toppish already. Alright, you can actually draw a line here in terms of the resistance. Yep. And if you go to the 4-hour chart, I'm going to a different time frame, so I just want you to be able to appreciate what the different time frame is showing, and then I'll tell you what's my reference chart, so that you know which chart time frame I'm planning to trade on. Okay, so if you notice, right, if you go to a daily chart, you can roughly tell that it seems that it's toppish and wants to consolidate based on number of candles that's unable to break the 19,000 or 20,000 level. 20,000 level seems to be very strong resistance, almost double or triple top kind of scenario. Yeah. And if you notice that the MACD here is making series of lower highs, so it's a bit of a bearish divergence as well. So if you look at the 4-hour chart, zoom out a bit. Okay, you notice that this stoppish area of 20,000 is still there. It's supported by this trendline support as well. So the first trade plan that you can look out for is a medium-term, short-term counter trend. If it breaks the trend line here, high chance it might come back to support around the 19,750 level somewhere here. Okay, but this trend line is supporting. Okay, but the trade plan is rather decent because you can see the tops that are being made here. The only thing that's in the way is the support trend line. If it breaks, high chance we will go to the 19,750 area. You can see from the support here and the support here. Okay, so you notice that the way I'm trading this is on the 4-hour chart intraday basis. I'm saying that you can trade it as a consolidation. You're just playing between the different support and resistance. But if you are a longer term trader, it is still bullish. Okay, but bullish doesn't mean you buy now. You still need to plan for it. So it really depends what is your reference chart. If you tell me that Nabil, my reference chart is a weekly chart, I say, okay, cool. The weekly chart is bullish, but I still wouldn't buy now because 20,000 is a resistance. Maybe I let it pull back to 19,500, then I enter a buy trade to the upside and target new highs. Okay, but because this is a weekly chart, maybe I'm a position trader. I keep it for weeks or months even. But if you're intraday kind of trader, then I will say that, okay, it makes more sense that 4-hour is my reference chart because I can see that the 4-hour is consolidating between these two support and resistance levels. There's a support trend line here. If the support trend line breaks, I'm willing to take a short and take it back down to the consolidation level of the 4-hour chart. And then you can use your 15-minute and 5-minute to plan the entry. You see the difference? All right. So Yusha, you asked me what's my trading style. My trading style is more towards intraday to swing. Intraday to swing. Yeah. But if you guys have any other time frame, even if you're a scalper, feel free to shout out to me and I will present the charts to you because how I analyze is the same regardless of time frame. So there's the Dow Jones for you. Let me go on to the DAX. Now if you look at the DAX, right, I think when I did the seminar for the Age conference, I was telling most people that it looks very bullish. It looks very bullish, okay? And if you look at let's start the weekly chart quickly one. The weekly chart still looks bullish. Look at that. Beautiful, nice, bullish engulfing candle, still breaking out, nice bullish trend. If we look at the daily chart, if I'm going too fast, tell me as well, yeah? If I look at the daily chart, same thing, very nice bullish trend. And if I look at the 4-hour chart, it's consolidation. And if you can see here, I'm a chronic scalper. Interesting why I use the word chronic. Chronic has a negative tone to it. There's nothing wrong being a scalper, Usha, but just make sure that it suits you. I mean, I tried scalping on 1-minute charts a couple of years back, and after a while I noticed that it's just not me. I'm a bit more, I prefer to let the trade run for a day or so. And partly because of my work schedule as well. Maybe if you're a full-time trader, you can do that. But it's something that you need to explore on your own. All of us have different psychology. So there's no right, no wrong, as long as you follow the strategy properly, properly, and of course make sure your psychology suits the 5-minute or the 1-minute kind of scalping strategy. Now back to the DAX, right? If you notice that it is bullish, but it is consolidating. Okay, so if you're trading intraday, I would suggest you look at these levels here. Yep. And basically you can actually just look at support to buy and look at resistance. So right now it's in the middle. Okay, the resistance is 11,650. The support is 11,530 or so. There's another level of support which I'm more interested in, which is here. All right, which is here. So for me, I'm bullish, but I'm looking it to come back around the 11,490 level. All this support here. In fact, for those of you want to trade even shorter term, right? If it breaks this support here, all right, there's an opportunity to the downside to the next level support. But basically, we're just trading consolidation. Okay, so if you notice the past 3 charts, right? Because the longer term charts are so bullish, but it's at resistance, I'm just looking to trade consolidation patterns on the lower term time frames. Okay, so I hope you can be you're able to see how different time frames show different things altogether. But right now there's a lot of correction. There's a lot of correction. And if you see these levels here, okay, you notice that the support, but I prefer this support level. But having said that, if you are a shorter term trader, pay attention at this 11,520 level. If it breaks, high chance it will go to next level support. It's more of an intraday kind of setup. Let's have a look at the 1 hour. Yep, you can see that clear in the 1 hour. Very defined levels. Look at this. Beautiful level here. And then back to here. Yep. Now the way you treat support and resistance, right? Why I do normally, I mean my trading has evolved to a zone whereby I'm able to understand or I'm able to tell myself that it's all a probability game. And I'm not too concerned whether there's confirmation or not, especially when I'm trading correction or consolidation levels. So if I see some kind of support being tested once, being tested twice, being tested 3 times, I'm more than happy to put a limit buy level at support and a stop loss maybe below the previous swing low here. Because at the end of the day, it's a probability game, and I realized that if I'm buying a support and if I wait for confirmation, sometimes the confirmation will actually give me a lower R to R. R to R is risk to reward. And at the end of the day, whether I wait for confirmation or I don't, it's still a probability zone, isn't it? So based on my support analysis, based on the price action analysis, I'm telling myself that this is a big fat consolidation, this support level. I'm going to get in because it's support. There's a high probability that it might move back to the resistance on the other side. So whether I wait for confirmation or not doesn't really matter. Because at the end of the day, it's all about risk, reward, and probability. Okay, so it's really how you guys want to take your trades. But I'm more into zone. Once you reach a level whereby, as a trader, you're not fixated or stuck into one position or emotionally attached to one position, and you always think in probabilities, you know that you have developed psychologically in terms of being a trader, which is very, very important. Because at the end of the day, it's all about probability. And the reason why most of us or a lot of traders lose money is because they got very attached to a trade. And when you're attached to a trade, it can either be one of the reasons, either you over leverage, you're having the all-in mentality, and basically you're not position sizing correctly, because if you do proper position sizing and you always risk, let's say 2% of your capital each trade, every trade you take is neutral. You should not have you should not be emotionally attached to trade. Okay, so something that you might want to look at for 2017 as well, on how to take your support and resistance. Yep. So so the next, look out for these levels. Okay, this support, if it breaks, then look out for the 11,480. Right now, anything between, nothing much. There's a secondary resistance level at around the 11,006. Okay, but not as nice. Not as nice. All right, so that's the DAX for you. Let's look at the Nikkei 225. Again, if you guys have any particular instrument you want me to cover, please shout out. I'll cover indices for the first half an hour or so, and then I'll do FX and some commodities. Okay. So this is the weekly chart of the Hang Seng, looking nice and bullish. Let's see whether there's any resistance up here. Okay, let me go to daily chart. So weekly is very bullish, looking good. Okay, daily chart is looking a bit more toppish. A bit more toppish. Okay, so you can see there's consolidation. Support is around the 19,000. Resistance is around the 19,580. Okay, I can see that the MACD, this looks quite similar to the S&P and Dow Jones, isn't it? You can see that the MACD has a lower high. Price is double top. It's a bit of a bearish divergence. Let's see whether there's a trend here. Hold on, yeah. Okay, sorry. I think I'll go to low time frame. Okay, so this is for daily chart. Just take note of the bearish divergence of the MACD. Okay, let's go to the 4-hour chart now. Okay, so if you see the 4-hour chart, okay, there's a bit of a trendline support here. Now the trade plan is this, similar to the DAX as well and a lot of the indices. There's a consolidation pattern that you can trade right now for intraday kind of setup. So the key thing is this. If you notice, the support level here seems to be broken. When was this? Today. Today was broken. See this red candle below. Support level was around the 19,350. So support, broken. Okay, but right now there's a support trend line here. Okay, what I like about this setup is that you can see a double top here and a lower low. Okay, double top, lower low, more often than not, it means a lower high, and then it might come back down to the support level here. It's a possible scenario. But this trend line needs to be broken. Okay, the aggressive setup will be the short from here. A more conservative will be waiting for the big trend line before targeting the 19,000 level. But don't forget, long term is still very bullish. Okay, so anytime you are in a trade and you're shorting and you're near 19,000 level, be very prepared that the bulls might just come in and take it up again. Yep, but it seems to be consolidating at the moment. So this is a short-term kind of trade plan, intraday kind of trade plan. Okay, so that's the Japan 225. The Hang Seng. Okay, if you guys got any questions, please shout. Man. Pretty quiet. 40 over of you here, but it's all very quiet. Anyway, webinar is good to be interactive. If not, it gets so boring. When I attend other people's webinars, trust me, my attention span is 15 minutes. I fall asleep after that. Because I'm a very restless person. But yeah, any questions on any instruments, please shout out. Because the best way to learn is through interaction. So the weekly chart on the Hang Seng seems bullish and supported. But this is the trend line here. If you look at the daily chart, wow, look at that. Really bullish. It's a bullish start to the year. Now, let me see where there's a little, let's see where we can draw this here. Let's see. Okay, now, okay, let's draw this here like that. Now, if you look at the Hang Seng, right, if you see where we are right now, all right, you know what? Let's ignore this trend line. This trend line is useless. Okay, but we can see that it is bullish. It's been bullish for very long. Look at the daily candles. How many green candles? Okay, just that where we are right now, there's quite a number of resistance coming up. Okay, to touch here and a touch here. Okay, in fact, the next level that we're looking at is anywhere around the 22,900 to 23,000. Okay, so daily chart seems bullish. I'll just be a bit more careful because we're approaching resistance, but it still seems good to the upside. There's no bearish divergence. MACD looks good as well. Let's go to the 4-hour chart. Okay, 4-hour chart looks pretty nice and bullish as well. So daily bullish, 4-hour bullish. Okay, just be a bit careful right now because you can see here another bearish divergence. Lower high in the MACD, higher high in the price. So the trade plan is I'm keen to, even though I'm bullish, right, I'd rather let it pull back to at least the 22,600 area before trying to take it up again. Okay, just because of what the MACD is showing me is a bearish divergence. If you look at the 1-hour chart, you can see here. This was a beautiful trade, by the way. I'm not sure. Look at the consolidation here. Consolidate. So the long-term trend is bullish. The shorter-term chart, 1-hour chart, consolidating for quite a while, and boom, when was this? Oh, this morning. I missed this trade. Any of you took the Hang Seng breakout? Okay, but look at this. Beautiful consolidation, nice breakout, pullback, and then short up. Okay, so for those of you who are not in the trade, a bit too late, but this is a classic breakout scenario kind of trade in the uptrend. This is a beautiful trade. I don't know why I missed it. Okay, but look at this again. Let me just go into the lower-term time frame. Right, see all this consolidation? Look at this pullback, breakout, pullback. Oh my god, it's so beautiful. It's kind of bread and butter. Maybe this shadow was a bit nervy, but other than that, oh, beautiful, beautiful trade. Okay, but for those of you who are a bit too late, kind of short term, one a bit concern is that on the 4-hour chart there's divergence, 50-minute chart there's divergence as well. You can see that it's making higher highs here, right? But you see that it's making a series of lower highs. So just be a bit careful for taking intraday, any more intraday longs. I'm more keen to let it come back down maybe around the 22,650 area, and then we see what happens. But there's a lot of bearish divergence on the 50-minute 4-hour chart, so I'll just be a bit careful of riding up, especially for the next few days. Okay, that's a Hang Seng for you. Let me get a few questions. QQQ, is it? Let me see whether I have that here. Hold on, yeah. Maybe I'll cover it later, yeah, Leonard? Yasin, don't know what's, oh my god. Don't worry, Yasin. I mean, as you get along, just ask any questions, okay? Lenny, WTI natural gas, sure. Looking at FX. Okay, I see a lot of FX and commodities. I'll cover that. Yasin has a question, how you know that the asset is going to break out based on the charts? So if you look at the, so Yasin's question is how I know whether the asset is going to break out. I wouldn't know when it will break out, but the charts can give me clues. So for example, the Hang Seng chart, you can see consolidation. This is a beautiful support and resistance level. Just playing around with it. Okay, this is the secondary support level here as well. Of course, on hindsight, everything's easy, right? But the first thing that you want to look up for a breakout, Yasin, is a clear break from a key support and resistance. So you can see that this support here at around 22,450 and this resistance here, this is very clear levels for you. Okay, and if you see a candle like that, okay, this green candle breaking these two levels, it's a clear sign that the bulls are in charge, and this is a breakout to me. All right, and then from there you just go on higher and higher. Yeah. All right, so there's a Hang Seng for you. Now, any other questions on indices? Now I'll move on to FX because I have a lot of questions on FX and commodities. Okay, if not, I'll take a 10-second pause and then I'll move on to FX.